just like this. Now what they are giving you, they are giving you facts. It's true. It's not false what they give. But the idea that I don't like is when they tell you buy. When they tell you buy, this is not related to the facts. This is what they ask you to do. So a lot of people, because they don't know what's going on, they just buy blindly. They buy blindly. They don't see anything else than what the other guys. And they think that they are right. It means this is what I see. Even here, sometimes some people come to the chat room and they try to argue that someone before told me, oh, you, how do you know better than analysis? I say in analysis, it is a job. I am not doing a job. I'm doing a business. I buy and sell stocks. He doesn't do that. How can someone doesn't work in the field? He knows better than someone who works in the field. This is stupid. It means there are some people who they are new. Hello, Mr. Nice. Please, welcome here. Listen, here how I do, guys. I will try to leave your questions at the end, at least 1 hour. 1 hour. I'm right now. I'm explaining my lesson, my live lesson. When I finish, I will begin checking your questions, and I will answer them one by one, from the first to the end. Okay? So don't worry, Mr. Rice, Mr. Nice. So you just wait. Try to learn from me what I am saying. And this is a good thing for you. This is the beginning and you will like it. At least you will have another idea what's going on. So, we said, the question I asked today, why stock market is strong even with bad news? Okay? So, everybody knows that we have bad news. See, for example, the protesters in the streets, the curfews, the looting of stores. Are these bad news? Yes. But why the market this week is so strong? So you should ask your questions, very, very essential questions. Why? If you are traders or swing traders like us, it means we buy and we wait for many weeks or many months. Swing traders. Or if you are day traders, okay, you should always look at what's going to the price. Now, we said there are two main sources of information. The first one is the media. The media is anyone or any TV or any news feed or Facebook or groups or anything that gives you the information. I said that most of these analysts, they give you the information and they sell you something. Now, it's for free. That's why the people, they like it. Oh, they say this is one of the famous gurus that we see in TV, and he should be right because he knows better than us. Okay? This is the problem. The problem is that those guys in TV, most of them, not all, most of them are doing what? They are doing a job. So understand the difference between a job and business. These guys, I'm not saying most of them, all of them now, mostly they don't trade. So if they don't trade, how can they ask you to buy or to sell things if they don't trade? And if you go to and if you can see, for example, what's going on in the market, you find these guys selling you something, but the problem of the media for the people who are following is it is free. And this is some people, they like it. They like something free. But they don't understand that I, and you guys, when you watch TV, you are the customer. So they give you something, a fact, for example, about a company. I say, for example, Facebook is making a lot of money. It's reaching all the world. All the companies are there represented. Anyone who wants to speak, he goes to Facebook. Even the guy who put the video about George Floyd is a Facebook guy. You see things. It means Facebook becomes a very powerful instrument of media. It's very, very powerful. It is more than TVs in the past. In the past, TV was the strongest because there is no other media that compete with TV. Now, Facebook is competing with all the media by itself, and it succeeds. You know, all these demonstrations, if the video was put into another website, small website, it couldn't be viral. Even in YouTube, it might not be viral because YouTube lost some of its strength when Facebook comes and becomes the dominant. Okay, it becomes the dominant thing. Hello, JJ. Thank you very much for coming. Now, so what is the second source of information? For me, is price. Price only. Why is that? Because the price, who makes the price go up? I'm telling you, if someone is following a lot, or I know most of you guys who follow me, they know you know the answer. So who change or who push the price up and down? Okay? So mostly our mutual funds are the biggest pensions, biggest brokers, okay? Rich people, all these guys, plus the public. Public, it is us, okay? Public, it is us. It means, when we say public, it means everybody, almost the traders are called the public. It means we don't have that much money like a hedge fund. For example, a hedge fund, he can have, for example, $50 billion in his hand. A manager, he is just a trader, but he has 50 billion. You know, 50 billion, he can go to a stock, any stock, smaller stocks, and he can short it and he can kill it. And he can make a lot of money, yes, because he is powerful. But, you know, a hedge fund, he needs friends. He needs other hedge funds. He needs the mutual fund to sell. Okay? Because sometimes hedge funds are also just a minute. So, as I told you, hedge funds, when they do, for example, when they begin shorting the stock, okay? See what happened. When they begin shorting the stock, it creates a big threat to all the people who have money in the market. Okay? People, they get scared. So when the people, they get scared, especially those who bought for 1 month, 2 months, 3 months, 6 months, they begin to sell heavily. They don't want to stay in a downtrend. And I have showed you the thing. I will show it to you now. This is psychological. It happens always in the market. Roof Boofman, hello. Thank you very much for coming. Top Series, thank you. Thank you very much for coming. Text Trader 61 cute. Thank you very much for coming. I will answer your questions when I finish after 1 hour. It means after 10. After 10, I begin to answer questions. So keep watching. Thank you very much. So, as I told you, there is what we call a psychological crisis happens in the market. You know, when the market begin to collapse, all the media, what do they say? Oh, they begin to make sure the people that you should sell. Do you understand? When the people begin to sell, and the people before they have positions to sell short. Now what does it mean? Who makes the money? It is those guys, those hedge funds in the whole world. It's not only in America, because our market, there are billionaires and millionaires, they are here. It means they are trading. Okay? It's not only in America. It means in the whole world. They let them, they accept them, they put their money here, and they let them trade. So you see that? So I will show you with a chart this psychological thing. At least you will understand. Okay? So you look here, you look now for the downtrend. Okay, here is the downtrend. You see how fast the stock is falling. You see how? So from here, for example, $295.72, the close of 12 February. Okay? 295. Here, 186. So you see, it's around 33% lost in how many days here? 23 March. Yes, it looks like 1 month. 1 month we lost 33%. But when this one here, all these people who don't get out, they lost all their money, and they lose money after all these profits. Okay? So let's take you with months. So here is the monthly. So here is the end of the month, which is when the stock is 182. Okay, $182. This is the low. Now you should go back here to Friday 29, 2016. Okay? 2016. So from 20 to 16, all these years of the market has been good. Okay, all these years that the market has been good. I can put it with yearly, maybe it's better. Yes, look here, guys, look here. In this year, 2020, it goes down. So this is 19, 17, 18. Oh no, 20, 19, 18, 17, 16. So it goes to 16, or it goes even to 15. But let's say it is 16. It means, what does it mean for you guys? Those people who bought here in 2016, it was a good year. 17, excellent year. 18, a red year, a bear year, but it's not that much. 19, excellent year. Now 20. 20, it goes down, 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 down until the 2016 or 2016 year. It means the year 2016. So you see where it goes, because it touched all the people here. Now here, when the market was going down, all the people have lost money, but almost all who sold their money, they lose all these 5 years investment. But most of the people, the big guys, they don't sell. They don't sell because of a year that it is bad. But the people who don't know, this is for people who are investing. But for people who are trading, you shouldn't stay in like this. A loser is a loser. You take a small loss and you exit. You don't have to go to it. Okay? So let's go back. Now,